It's been a big fall for the rand this year in particular, 13.88 as we speak, as Simon said as well there. But joining us on the line as well is Lukman Otunuga, who's the research analyst at FXTM. More pain ahead for the rand, Lukman. It's going to be a tough time. Trade wars, the health of South Africa's economy, all of those factors seem to have just been culminating into a South African rand that continues to weaken. Do we get any respite any point in time?
It's very interesting. We can already see that the third quarter of 2018 has started with an ominous start, in the sense that escalating global trade tensions seem to be a major market theme that continues to weigh heavily on global sentiment. Global stocks remain under pressure. Emerging markets are feeling the burn, especially the South African rand. Year to date, the South African rand has actually depreciated roughly 12% against the dollar. And we could see more pain if global trade tensions become a dominant market theme. It must be kept in mind that at the same time, domestic issues in South Africa continues to heavily impact the currency. The Ramaphosa effect seems to be wearing away, with the disappointing economic growth seen in the first quarter of 2018, somewhat haunting investor attraction towards the South African rand. When keeping in mind that the Federal Reserve is en route to raise interest rates another 2 times this year, the monetary policy between both central banks simply spells more pain for the rand.
Before we head on, as you started speaking towards the end there about the international factors, I want to focus on the domestic ones themselves. Did we overestimate the Cyril Ramaphosa effect, one? And did the rand really play a lot of, a huge part in that? Did the rand really move along, the departure of President Jacob Zuma, the win by Cyril Ramaphosa in December as well? Did the rand really play in there? Or were we just, hopeful that it would, and that, things were just looking better? Because at the same time, we did have a huge emerging market buy-in from the rest of the world.
Yes, so as we can see, it was very interesting what happened. It was a sense of optimism over change, over Ramaphosa elevating the South African economy. And based on this, the investor attraction towards the South African rand at that point in time was elevated. Economic data at the same time initially was looking quite positive. It was only when the reality hit, when first quarter economic growth started to disappoint, in which we saw the rand starting to weaken. It may still be too early to fully price in the effects of Ramaphosa to the South African economy. I'll be looking very closely to see how economic growth plays out in the second half of 2018.
In the long term, is there a way for South Africa to find its own way to circumnavigate the risks of the international market, not be as affected by it? Are we fully entrenched in the global market that sadly there is no way out for us?
This is another very interesting question. South Africa, like an emerging market, it's likely to feel the pain with many others. Must be kept in mind that a global trade war represents a significant threat to global stability and economic growth. If tensions continue to escalate between the United States and China, everybody's going to feel the pain, including the South African economy.
Yeah, certainly going to be a painful one. Do we get a recession later on in the year as well, is also the question now. Third quarter not looking too good. Lukman Otunuga, thank you so much for your time. Research analyst at FXTM.